Have you ever wondered if you need to pay tax on inheritance in Australia? Tax systems vary from country to country, and it can be confusing for migrants who come from different systems. Recently, a couple of my clients received inheritances from their late parents, including properties and shares. They wanted to know about the tax implications if they decided to sell these assets one day. In Australia, when capital gains tax assets are transferred to beneficiaries, you typically don't need to pay tax at that point. But when you sell these assets, you will need to pay tax. Let's take an example. Mary bought her investment property in January 1995 for $200,000. When she passed away in May 2023, the property was valued at around $900,000. Her only son, Paul, inherited the property and sold it as soon as the title was transferred to his name. Since the property was held by Mary for more than 12 months, a 50% capital gains tax discount applies. So the capital gain is calculated as $900,000 minus $200,000 multiplied by 50%, which equals $350,000. This amount will be added to Paul's taxable income for that tax year. The same rules apply to shares. Now let's talk about pre-GST assets. If Mary had bought her investment property before 20th September 1985, the property would be considered a pre-capital gains tax asset. Pre-GST assets are generally exempt from capital gains tax. This means that when Paul inherits the property and sells it, the capital gain from the increase in value during his mom, Mary's ownership period is not subject to capital gains tax. For example, if Mary had bought a property in January 1980 for $100,000 and it was worth $900,000 when she passed away in May 2023, Paul would not pay GST on the $800,000 increase in value during Mary's ownership. However, if Paul sells the property 2 years later, say for $950,000, the GST will be calculated based on increase in value from the date of inheritance to the date of sale. In this case, the capital gain would be $50,000 because it is held for more than 12 months. Paul would be eligible for 50% GST discount, resulting in a taxable gain of $25,000. Tax implications on inheritance can be complex. If you need guidance, please reach out. See you next time.